In today's video, I'm going to talk about the basic loan options that you have, and that essentially means how you deal with your principal and how you deal with your interest. When it comes to principal, there's two main types of loans, a principal and interest and an interest only. So with the principal and interest, what that means is you borrow a certain amount of money for a certain period of time, and during the course of the loan, you pay back that loan entirely. So at the end of the loan, you owe nothing. And this has got to be probably the most common strategy for homeowners, as that's the ultimate goal. You want to pay back your loan and owe the bank nothing, to own your property outright. With an interest-only loan, however, there's probably for a different market. What you're doing there is you borrow a certain amount of money, again for a certain period of time, but you don't pay anything back off that principal amount until the end of the loan. Their strategy would be to hold the property for a few years. At the end of that period of time, the property value's gone up, hopefully, and they sell the property, they pay back the loan, and they take any profits that are left over from there. This is also done by new homeowners as an introductory strategy, because it means you have lower repayments for the first 1 or 2 years. However, what you'd want to be doing is converting that to a principal interest payment to actually end up paying back the home over a period of time. Now when it comes to interest rates, there again is two main types. You've got a variable interest rate and a fixed interest rate. The variable interest rate is probably the more common, and it's what most loans will revert to after a period of time anyway. And that is when the banks follow their interest rates against the Reserve Bank of Australia interest rate. So as the Reserve Bank puts their interest rates up, banks will put their interest rates up and you end up paying more. When the Reserve Bank puts its rates down, banks will typically drop their rates as well to match, and you end up paying less on your home loan mortgage. Now the benefit of this for the banks is that they have a guarantee of their profit margin. So typically with a variable interest rate, you tend to get a lot more flexibility in the loan because of that protection for the bank. They offer things like offset accounts and redraw facilities, split accounts and all sorts of things, which can be quite attractive to borrowers. On the other hand, you can have a fixed interest rate. Now that's when, regardless of what the Reserve Bank is doing, the bank or the lender that you're dealing with will fix the rate for a period of time, and that's typically from 1 to 5 years. Now the reason they don't go any longer than that, and the reason that you might not want to go any longer than that, is there is no protection either way for either the bank or the borrower. If interest rates happen to go up significantly, and you're on a fixed rate, that's great for you, but the bank will take a hit on their profits, which they tend not to like to do. On the other hand, if interest rates drop, you're fixed at a higher rate, which is bad for you, and the banks just happen to make more profit at that particular time. So there is a degree of risk, and because of that risk, again, you tend to get a lot less options available to you. So you'll typically not have the redraws or the offset or the split accounts, etc. And that's maybe, that lack of flexibility may be something that is important to you, and that may be a reason why you may choose to not have a fixed loan account. So between those two types of loan repayments, principal repayments and interest, you have a principal and interest or P&I loan with a variable rate, you have a P&I loan with a fixed rate, you have an interest-only loan with a variable rate and an interest-only loan with a fixed rate. And they're the basic loan option types that you would typically look for or look at when taking out a loan for residential property. In the meantime, if you found the video useful and you'd like to see more of this type of information come through, please hit the subscribe button and the bell to get notified. And if you find yourself ready to take out some sort of loan but would like some help in doing so, I'm based at Norwood in South Australia. My contact details are in the description below, and I'd love to help you. In the meantime, I look forward to seeing you again next week, and until then, happy house hunting.